Payable. Class, our topic for today is bonds payable. Let's have an illustration. For example, we are Globe Telecom and gusto nating i-improve yung internet services natin. Meron tayong project to increase the internet speed and coverage. So in order to do that, kailangan natin mag-construct ng mga towers or cell sites. Obviously, kailangan natin ng cash for the construction. So si Globe, meron siyang different options to fund or to finance the project kung paano siya magkakaroon ng cash. Number one, pwede siyang umutang sa bank or bank loan. Pwede siyang mag-issue ng shares or pwede siyang mag-issue ng bonds. Okay? So for example, si Globe, nag-issue siya ng bonds to X, Y, and Z. Ang tawag natin kay X, Y, and Z, they are the bond holders or the investors. So yung mga bond holders na yung class, pwede yung individuals, tayo, or mga companies. Okay? Ang tawag naman natin kay Globe, siya si issuer. So ang mangyayari dyan class, si bond holders, X, Y, and Z, mag-i-invest sila, for example, 100 million pesos to Globe. Okay? So ang gagawin ni Globe, yung 100 million na yan, yun yung gagamitin niya to construct the towers or cell sites. Obviously, since mag-i-improve yung internet services, possible na dumami yung subscribers, mas tataas yung net income ni Globe. So yung net income na ma-generate ng project na yan, yan yung gagamitin ni Globe to pay for the principal and interest of the bonds. Okay? So magbabayad tayo ng principal and interest, kaya class yung bonds is a liability. Okay? Kaya siya tinawag na bonds payable. So basically class, yung bonds is a form of financing. Okay? So pag yung mga companies, kailangan nila ng cash for the projects, pwede sila mag-resort to issuance of bonds. Alright, now, tingnan natin class yung journal entries in the books of Globe. So again, yung bonds is a liability. So journal entry in the books of Globe, debit cash, credit bonds payable, 100 million. Alright? Now, in the books of the bondholders or the investors, journal entry is debit investment in debt securities, credit cash, 100 million. Actually, class, na-discuss natin yan. So, discuss natin yan under investments. Alright? So, yung investment in debt securities, to recall, pwede mo siyang i-classify as FVPL, FVOCI, or amortized cost. Okay? So, ngayon, magko-concentrate naman tayo dun sa issuer side or dun sa side ni Globe. Okay? So, because magbabayad tayo ng interest, meron tayong debit interest expense, credit cash, for example, 10%. 100 million times 10% is 10 million. In the books of the bondholders or the investor, debit cash, credit interest income, 10 million. Okay? So these are journal entries in the books of the issuer and the investors. Now, lahat ng details of the bonds or yung terms of the bonds, they are contained in what you call bond indenture. Okay? So basically, the bond indenture contains again the terms or details of the bonds such as the principal amount, ano pa, interest rate, maturity, and other details of the bonds. Right? Now, let's take a look at the measurement. So, para lang siyang notes payable. Kung maalala nyo sa notes payable, ang ginamit natin is PFRS 9 because bonds payable is also a financial liability. So, we have initial measurement and subsequent measurement. Bonds payable is initially measured at fair value minus transaction cost. So, di ba ganyan din yung notes payable? Fair value minus transaction cost. Ang pagkakaiba nila, class, for notes payable, usually zero yung transaction cost. Okay? For bonds payable, usually merong transaction cost. Ang tawag natin dyan, bond issuance costs. Okay? Bonds issuance cost, yan yung mga necessary costs related sa pag-i-issue ng bonds. Okay? Ang effect ng bond issuance cost is, number one is to increase the discount on bonds payable or to decrease the premium on bonds payable. Sulat mo muna, later, papakita ko sa inyo sa illustrative examples natin. So again, for the transaction cost, for bonds, ang tawag doon, bond issue cost or bond issuance cost. Ang effect niya, increase the discount or decrease the premium on bonds payable. Subsequently, every December 31, bonds payable is measured at amortized cost. Tandaan natin, pag sinabi mo amortized cost, gagamit tayo ng amortization table using the effective interest method. Master na yung pag-create ng amortization table. Okay? Now, whenever we issue bonds, meron tayong two rates na i-compare. Ang tawag natin doon, effective rate and nominal rate. Na-discuss natin yan before, pero reviewin natin yan. Ang ibang tawag sa effective rate is the market rate, the discount rate, and sometimes tinatawag din siyang yield. Okay? So, ito yung other terms for effective rate. So, ulitin ko, effective rate, market rate, discount rate, and yield, yung four terms na yan, magkakamukha lang ibig sabihin yan. Okay? Now, nominal rate, this is also called the coupon rate or the stated rate. Kaya siya tinawag na stated yan sa bond indenture. Kung magkano yung interest na babayaran ni Globe dun sa mga bondholders. Okay? Now, tatlo lang naman yung possible scenarios dito. If the effective rate is equal to the nominal rate, the present value of the bonds, kasi kailangan natin compute yung present value niyan because yung bonds, non-current yan. Matagalan kasi yung bayaran sa bonds. Okay? Ulitin ko, if the effective rate is equal to the nominal rate, the present value of the bonds is equal to the face amount. Ano yung face amount sa illustration natin? 100 million. Right? Sir, ano yung importance ng present value? Iyan yung kung magkano yung kailangan ibayad na cash ni bondholders kay Globe or yung ipahiram, okay, ni bondholders to Globe. Alright? So basically, yan yung presyo ng bonds. So dahil ko dito, yung pagsabi mong present value, yan din yung price of the bonds or yung fair value of the bonds. Yan yung kung magkano babayaran ni bondholders si Globe. Okay? Now, next. If the effective rate is greater than the nominal rate, okay, the present value is at a discount. Okay? Pag sinabi mong discount, less than the face amount of 100 million. Okay? And next one, if the effective rate is less than the nominal rate, the bonds will be issued at a premium. Pag sinabi mong premium, more than the face amount of 100 million. Okay, so ito lang yung 3 scenarios na pwede natin ma-encounter sa issuance of bonds payable. Okay, yan yung basic concept of bonds. Para mas ma-appreciate natin yung class, let's apply the concepts by answering illustrative example number 1. Illustrative example number 1, this is about bonds issued at a discount. Kailan nga ba ulit class nagkakaroon ng discount? Whenever the effective rate is greater than the nominal rate. Let's read the given. Requirements muna, determine the price of the bonds. Pag sinabing price, yun lang din yung present value, okay, or the fair value. Ano ulit class yung importance ng present value, price, or fair value? Iyan yung kung magkano yung ibabayad ni bondholders kay Globe. Okay, sa illustration natin, iyan yung 100 million. Gets? Okay. Sige, so let's read the given. On January 1, 2025, Pinnacle Company issued 10% bonds dated January 1, 2025 with a face amount of 20 million. Lagyan natin yung mga given. No? So meron tayong nominal rate, okay, which is 10%. Right? And then yung face amount is 20 million. The bonds mature on December 31, 2034. So pag binilang mo yan, January 1, 2025 to December 31, 2034, that's 10 years. So lagi ko dito yung period N na lang. Okay, yes, 10 years. And then, for bonds of similar risk and maturity, the market yield, ano ulit yung market or yung yield? Yun yung effective rate. So lagi ko dito class, effective rate natin, according to the problem, is 12%. Okay, so nominal rate, 10%, effective rate, 12%, period is 10 years. Pero take note, interest is paid semi-annually. Okay? Kung maalala nyo yung discussion natin sa notes payable, pag semi-annual, kailangan natin i-adjust yan. Right? So yung rate, i-divide mo by 2. So magiging 5% yung nominal, effective will be 6%. Pero yung period or yung term, multiplied by 2 yan. Okay? Kasi meron dalawang semi-annual in 1 year. So times 2, you get 20 yung periods natin. Okay? Now, so pag dito, given na yung PV factor. So wala na tayong issue dyan. Pero pag nakalagay dyan class, PV of 12% for 10 periods. Huwag mo gagamitin yun. Okay? Ang gagamitin mo, PV of 6% for 20 periods. So, ingat ka dun sa PV factor na gagamitin mo. Alright? Requirement number 1, determine the price of the bonds. Okay? Yung price of the bonds is just basically the present value of the principal and interest. Okay? So, compute natin yung present value. Start muna tayo with the principal. So, principal is, yung face amount is 20 million. Tama? So, 20 million, multiply natin yan by the PV factor of 0.3118 times 0.3118. Okay? So, compute natin yung class. 20 million times 0.3118, you get 6236,000. This is the present value of the principal. And then, present value of the interest. How much class yung interest? Again, based yan dun sa nominal rate. Okay? Yung interest, again, yung interest payment natin is a nominal rate. 20 million times 5%. So, that's 1 million every 6 months. Multiply natin by the PV factor, yung ordinary annuity na 11.47. So, 1 million times 11.47, you get here 11,470,000. So, present value of the principal, 6236. Add natin yung present value of the interest na 11,470, you will get here 17,706,000. Ano tawag natin niya, class? Ito yung price, also called the present value, also called the fair value. Ano yung importance yan? Iyan yung amount na kailangan bayaran ni bondholders dun sa issuer. Okay? So ayan, requirement number 1, sagot mo dyan, 17,706,000. Take note na yung 17,706,000 is less than 20 million. Okay? Ang tawag natin dyan, class, is a discount. Tama? Kailan ulit magkaka-discount? Effective rate is greater than the nominal rate. Effective rate natin 6%, mas mataas siya sa nominal rate na 5%. Therefore, the bonds will be issued at a discount. Okay? So, ayan. Requirement number 2, prepare the journal entries. So, obviously, kailangan natin gumawa ng amortization table because amortized cost yan eh. Okay? Gamitin natin yung amortization table using the effective interest method. Medyo bibilis ako na lang ipag-create ng amortization table kasi alam ko, master na master yun na yan. Okay, mabilis lang. So, we have date, we have interest expense, interest paid, interest expense, amortization, and the carrying amount. Okay? So, lagyan natin yung dates. January 1, 2025. Partial lang yung gagawin ko na amortization table. This June 30, okay, 2025 kasi semi-annual. December 31, 2025, June 30, 2026, and December 31, 2026. Interest paid natin, kapag gagawa ka ng table, lagi mong ilalagay yung interest rate sa taas para hindi mo makalimutan. Interest paid natin is based on the nominal rate na 5%. Interest expense natin is based on the effective rate of 6%. Present value, na-compute natin, 17,706,000. Therefore, yun yung carrying amount as of January 1, 2025. Okay? 17,706,000. Pero lagay muna natin yung interest paid. How much class ulit? Yung interest paid natin every 6 months. 20 million times 5% or just 1 million. Lagay dito, 1 million, 1 million, 1 million, and 1 million. Okay? Let's compute for the interest expense. Just the carrying amount, multiply by 6% times 6%. Nakuha ko dito class 1,062. 360. Amortization is the difference between the two, 62, 360. And again, ang goal natin sa amortization, whether the bonds is issued at a discount or premium, sa amortization table natin, gusto natin maging equal to the face amount yan. Okay? So, ibig sabihin class, kailangan sa maturity date, yung 17 million yan, maging 20 million. So, kailangan natin i-add yung amortization. 62,360 plus 17,706,000, makukuha mo dyan class, 17,768,360. Alright, so, yan yung June 30, 2025. So, kompletuhin ko lang kasi yung table. December 31, 2025, you will get here 1066,102. Amortization is 66,102. Carrying amount 17,834,462. June 30, 2026, 1070,068. Amortization 70,068. Carrying amount is 17,904,530. And last one, December 31, 2026, 1074,272. Amortization natin is 74,272. Carrying amount is 17,928,802. Medyo binilisan ko na lang class yung pag-create ng table. Again, alam kong alam niyo yan. And partial lang. Okay, kasi 10 years yan or 20 periods, maubos yung time natin. So, partial amortization table lang. Now, analyze natin yung table. Doon muna tayo sa interest paid na 1 million per year. Diyan, walang issue. Okay, because again, pag interest paid, fixed amount yan every 6 months. Okay, so 1 million every 6 months. Pero tingin tayo sa interest expense. If you can see here, class, 1,062,000, naging 1,066,000, 1,070,000, and 1,074,000. Tama ba? Increasing yan. Okay, papataas yung interest expense natin. Bakit sir increasing yung interest expense? Take note na yung interest expense is based on the carrying amount. Kung mapapansin nyo, since issued at a discount yan, tumataas yung carrying amount natin. 17,706, naging 17,768, and so on and so forth. So kung tumataas yung carrying amount, tama lang na tumaas yung interest expense natin. Got it? Now, let's go to amortization column. 62,000, naging 66, naging 70, naging 74, that's also increasing. Therefore, if the bonds is issued at a discount, interest expense is increasing, amortization is increasing, and the carrying amount is increasing. Okay? So, ganyan siya. Now, let's take a look at the journal entries. Again, pag journal entries, tingin ka sa table. Okay na tayo sa, start muna tayo sa January 1, 2025. January 1, 2025, debit cash. Siyempre, yung marireceive natin is the price or the present value, 17,706,000. Credit bonds payable. So, yung bonds payable mo class, lagi siyang at face amount. Okay, 20 million. And then debit discount on bonds payable, difference sila, 20 million minus 17,706,000, you have 22,904,000. Okay, so this is your entry January 1, 2025. Now, kung titingin ka sa balance sheet, yung presentation niyang class, meron tayong bonds payable na 20 million, less discount on bonds payable na 22,904,000, carrying amount of the bonds payable, January 1, 2025 is 17,706,000. So FYI, ito yung presentation niya in the balance sheet. Again, non-current liability yan. Let's go to June 30, 2025. Journal entry natin. So, tingin ka lang sa table, bayad muna tayo ng 1 million, debit interest expense, credit cash, 1 million, and then record natin yung amortization. Now, since originally, okay, ang normal balance ng discount is a debit. Again, kailangan mag-zero yan sa maturity date. So, kailangan natin i-credit yan. Okay? Credit discount, therefore, interest expense is your debit. How much ulit yan? 62,360. So, pag in-add mo yung class, 1 million, dinebit mo na interest expense, add mo yung 62,360, that is 1,062,360, which is basically the interest expense column in our amortization table. Okay? So, December 31, 2025, bayad tayo ng 1 million, debit interest expense, credit cash, 1 million, and then record natin yung amortization, debit interest expense, credit discount, 66,102, and so on and so forth. Okay? So, obviously, pag ang tanong sa'yo sa problem, how much yung interest expense, tingin ka lang dyan. Pag ang tanong is carrying amount, tingin ka lang dyan sa last column. Okay? So, that's how you do bonds issued at a discount. Okay, compare naman natin yung class sa illustrative example number 2. Number 2 is about premium naman. Okay? Let's take a look at the requirements. Actually, same requirements. Price of the bonds and journal entries. So, let's read the given. On January 1, 2025, Pinnacle Company issued 12% bonds. So, lagay natin yan. Nominal rate, okay, is 12%. Dated January 1 with face amount of 20 million. The bonds mature December 31, 2034. That is, yung term natin, N na lang itawag natin dyan, is 10 years. Okay, the market yield or yung effective rate natin is 10%. Lagay natin effective rate, 10%. Okay? Interest is paid semi-annually. Pag semi-annual, update or i-adjust natin yung rate. Divide by 2, that's 6%. Divide by 2, that is 5%. And don't forget na i-multiply by 2 yung periods natin. Times 2, 20 yung periods natin. Okay? Sige, determine the price of the bond. So, let's compute the present value. Present value mo tayo ng principal, just like what we did sa illustrative example number 1. Principal natin is 20 million. Multiply natin sa PB factor of 0.377. Okay? So, 20 million times 0.377, you get 7,540,000. Let's compute the present value of interest. How much class yung interest natin? Again, based lang sa coupon rate na 6%. 20 million times 6%. Na-compute mo ba yung 1.2 million? Yes. So 1.2 million per year, multiply natin sa ordinary annuity na 12.46. 1.2 million times 12.46, you get 14,952,000. Add natin yung dalawa, 7,540 plus 14,952, you get 22,492,000. The price or the fair value or the present value of the bonds, sagot natin sa illustrative example number 2, 22,492,000. Ano ulit yung importance yan? Again, iyan yung price ng bond. So, yun yung babayad ni bondholders dun sa issuer. Okay? Now, take note that 22 million is greater than the face amount of 20 million. Mas mataas sa face amount yan. Ano tawag natin dyan, class? Bonds issued at a premium. Tuwing kailan magkakaroon ng premium? If the effective rate is less than the nominal rate. Effective rate natin is 5%, which is less than the nominal rate of 6%. Okay? Now, let's take a look at the journal entries. Gawa tayo ng amortization table. Mabilisan lang. We have date, interest paid, interest expense, amortization, and carrying amount. Okay? Now, kapag amortization table, lagay mo na agad yung interest rate sa taas. So, yung nominal natin is 6%, lagay mo sa interest paid. Effective rate natin is 5%. Okay? Lagay natin yung dates. January 1, 2025, June 30, 2025, December 31, 2025, June 30, 2026, and December 31, 2026. Lagay mo yung present value dito sa carrying amount on January 1, 2025, 22,492,000. And again, yung interest paid natin, class, is just a fixed amount. Na-compute natin earlier, 1.2 million. Lagay natin yan, 1.2 million. For the interest paid, bibilis ako na lang yung pag-create ng amortization table. Let's do the interest expense. 22,492,000. Multiply natin by 5%, you will get 1,124,600. 1,124,600 minus natin sa 1.2 million. Okay, 75,400. So, class, ano gagawin mo sa 75,400? Do you add or do you deduct dun sa 22 million? Siyempre, kailangan natin i-deduct. Okay, kasi ang goal natin, yung carrying amount maging equal sa face amount of 20 million at maturity date. So, kailangan bumaba yan ng bumaba up to 20 million. So, i-minus natin yan. Carrying amount natin is 22,416,600. Okay, I'll complete the table. Interest expense natin, December 31, 2025. Na-compute ko, 1,120,830. Amortization is 79,170. Carrying amount, 22,337,430. Okay. Interest expense, June 30, 2026, 1,116,872. Amortization is 83,128. Carrying amount natin is 22,254,302. And then interest expense, December 31, 2026, 1,112,715. Amortization is 87,285. Carrying amount, 22,167,017. Okay, binilisan ko na lang yung pag-create ng amortization table, which is actually partial amortization table. Let's analyze the table. Interest paid, walang problema. Again, it's just fixed amount every year. Interest expense, 1,124, naging 1,120, naging 1,116. Decreasing siya this time. Sir, bakit decreasing? Because interest expense is based on the carrying amount. Since yung carrying amount mo at a premium yan, so kailangan bumaba ng bumaba yan, 22,492, 416. So decreasing yan, therefore decreasing din yung interest expense mo. Does that make sense? Okay. Pero take note sa amortization. 75,400, naging 79,170, naging 83, increasing pa rin yan. Napansin yan? Okay. So, ibig sabihin, whether the bonds is issued at a discount or at a premium, the amortization column, your amortization is always increasing. Okay, so analyze natin. Pag discount, increased interest expense, increasing amortization, increasing carrying amount. Pag premium, decreasing interest expense, increasing amortization, and decreasing carrying amount. Alright, so ganyan siya. Let's take a look at the journal entry. Siyempre, tingin ka lang sa amortization table. O, January 1 muna tayo. So, January 1, dito ko lalagay yung journal entry natin, class. January 1, nag-issue tayo, di ba? So, debit cash, how much yung na-receive natin? The present value, 22,492,000. Credit bonds payable, laging at face amount yan, na 20 million. So, this is January 1, 2025. And then, credit premium on bonds payable, 2,492,000. Okay, yung presentation sa balance sheet mo, meron kang bonds payable 20 million, add premium on bonds payable 2,492,000, carrying amount natin 22,492,000. June 30, 2025, bayad mo tayo ng interest na 1.2 million, debit interest expense, credit cash 1.2 million. I-record natin yung amortization na 75,400 since premium, yung credit balance niya is, yung premium has a normal balance of credit, kailangan natin i-debit yan. Debit premium on bonds payable, credit interest expense 75,400. Now, nag-debit tayo ng 1.2 million na interest expense, nag-credit tayo ng 75,400. Tingnan natin yung difference. 1.2 million minus 75,400, makukuha mo dyan, class, 1,124,600. This is basically the interest expense column in our amortization table. So, ganoon lang din gagawin natin December 31, 2025 and every interest payment dates. Okay, so that's how you do bonds payable issued at a premium. Let's now go to illustrative example. Number 3. Sir, ano naman yung number 3 na yan? So, as I mentioned earlier, class, usually, yung issuance of bonds natin, merong transaction cost yan. Ang tawag natin doon, bond issuance or bond issue costs. Right? Ano yung effect niyan? Increase discount or decrease premium. Pakita ko na sa inyo kung paano. So, let's go to illustrative example number 3. Erase ko muna yung nasa board. And ayan, so basahin natin, class. Requirement natin here is prepare the amortization table and then journal entries from 2025 to 2027. Let's read the given. On January 1, 2025, Mr. Accounting Company issued 1,000 peso 10% 3-year bonds, okay, for 951,963. Alright, so binigay na sa ating class yung present value, 951,963. Hindi natin kailangan computin. And alam natin na yung face amount is 1,000 times 1,000 or 1 million. Yung 1 million daw na issue for 951,963. Ano tawag natin dyan? Premium or discount? Obviously, it's a discount. Okay? Kasi below face value. Alright. Principal is due on December 31, but interest is due annually every year. And so, lagyan natin class. Yung nominal rate natin here is 10%. Okay? In addition, Mr. Accounting incurred bond issue cost. Yun yung transaction cost. Alright? How much? 44,829. The effective interest rate is 12% before adjustment and 14% after adjustment for bond issue cost. So, yung effective interest rate daw natin, class, from 12% naging 14%. Tumaas siya. Meron ba kayong concept na medyo naalala about it? Well, actually, parang yung sa loans natin. Loans receivable or loans payable. Naalala niyo yung mga origination costs? Ano ulit sabi ko doon? Kapag may origination costs, ang effect niya is tumataas yung effective rate. Because gastos natin yun. Dagdagan yung gastos natin. So, effectively, tumataas yung binabayaran natin. Okay, ganoon din sa bonds. Again, ang effect ng bond issue cost is tumataas yung effective rate natin. From 12% nung wala pang bond issue cost, naging 14% siya. Gets? Okay. Now, pakita ko yung journal entries. So, January 1, 2025. So, take note here na annual yung payment. So, hindi mo na kailangan baguhin yung 10% and yung 14% na yan. So, kung gagamitin yung 12%, 14% gagamitin mo. Debit cash, binigyan sa atin yung present value, 951,963. Okay. Credit bonds payable, face amount natin is 1 million. So, 1 million minus 951,963, discount natin class is 48,037. Okay, this is our journal entry, January 1, 2025. Now, nag-incur tayo ng bond issue cost. Nakita nyo dyan yung 44,829. Ano sabi ko earlier? Either i-charge mo siya sa discount, add mo sa discount, or i-minus mo sa premium. So in this case, since meron tayong discount on bonds payable and bond issue cost, nagbabayad tayo. So credit cash yan, credit cash. Debit, discount on bonds payable. That is 44,829. So debit ka ng discount na 48,037, nag-debit ka ulit ng 44,829. Kaya sabi ko kanina, bond issue cost, ang effect niyan, nag-i-increase yan ng discount on bonds payable. Alright? Now, what if naman class, yung issuance natin is at a premium? Okay? Siyempre, alam natin, yung premium, normal balance niya is a credit. So, ang mangyayari dyan, kapag premium, debit premium on bonds payable, credit cash. Mababawasan yung premium natin. Kaya sabi ko dyan, minus yan sa premium. Okay? So, yung bond issue cost, depende. Kapag issue at a discount, plus sa discount yan. Kapag issue at a premium, minus sa premium yan. Alright? So, ganyan siya. Now, yung presentation natin class, in the balance sheet, FYI, meron tayong bonds payable na 1 million, meron tayong discount on bonds payable, add natin yung dalawa, 48,037 plus 44,829, 92,866. Okay? Carrying amount of our bonds payable, so minus 1 million, you get 907,134. Alright? So, that's the journal entry and the presentation on January 1, 2025. So, tinatanong yung entries. Actually, gagawin ko na rin yung amortization table, pero mabilisan lang kasi 3 years na naman yung term of the bond. Interest paid, interest expense, amortization, and carrying amount. Okay? So, January 1, 2025, December 31, 2025, December 31, 2026, and December 31, 2027. So, again, yung nominal rate natin is 10%. And, gagamitin mo effective rate, wag yung 12% ha, dapat yung after the bond issue cost na 14%. Carrying amount na na-compute natin, ito na yung gagamitin mo after the bond issue cost. 907,134. Okay, so let's do the amortization table. 1 million times 10% every year, 100,000 yung interest payment natin. Interest expense, 907,134. Multiply ko yan by 14%. Nakuha ko class 126,999. Amortization siya sa difference, 26,999. And gusto natin maging 1 million yan, therefore yung carrying amount natin, add natin yan, 934,133. I'll complete the table. Interest expense natin, December 31, 2026, 130,779. Amortization is 30,779. Carrying amount is 964,912. Okay? Since last year na yung December 31, 2027, dapat at face amount na yung carrying amount, 1 million. So adjust ko na lang yung amortization. Amortization natin should be 35,088. Therefore, interest expense is 135,088. This is the amortization table for the bond issue cost. Tingnan natin yung journal entry, December 31, 2025. December 31, 2025, debit interest expense, credit cash, yung payment natin is 100,000. And then let's amortize. Debit discount on bonds payable, credit cash, 26,999. Okay, so ganyan lang yung journal entry natin. Alright. So again, ulitin ko lang, bond issue cost, ano yung effect niya? Increase effective interest rate. Alright? I-charge mo siya sa either discount or premium on bonds payable. That's illustrative example number 3. Okay. Now, let's do illustrative example number 4. So for number 4, nakalagay diyang class is issuance of bonds between interest payment dates. So basically, pag nag-issue tayo ng bonds, naalanganin yung date. Okay, I'll show you. So for number 4, tignan natin. Requirement is prepare the journal entries for 2025. Now, on April 1, 2025, CPA company issued 12% 1 million bonds dated January 1, 2025. Okay, we have two scenarios. The bonds were issued at 97. Pag sabi 97, 97%. Okay? Yun yung fair value ng bonds, including accrued interest. Take note, nakalagay including. Scenario number 2, the bonds were issued at 97, excluding naman. Okay, hindi kasama daw yung accrued interest. Sir, bakit may accrued interest? Ganito yung class. So, kung gagawa tayo ng timeline, this is January 1, 2025. Yun yung date ng bonds, no? Inisyo siya, April 1, 2025. Okay, ito yung issuance. And let's assume na every December 31, nagbabayad ng interest. Okay, ito yung bayaran ng interest. Interest payment. Now, usually, dito dapat yung issuance ng bonds. Okay, January 1 dapat. Kaya lang, alanganin siya. Okay, kaya ang tawag natin dyan, issuance of bonds between interest payment dates. Ito yung isang interest payment or December 31 last year. And then, ito yung next interest payment. Between siya. Ang tawag dyan, again, bonds issued between interest payment dates. Now, ang magiging issue natin dyan, class, is that merong accrued interest yan. Okay? May accrued interest na kailangan bayaran ng mga bondholders. Binabayaran ng mga bondholders yan. Okay? Now, papakita ko sa inyo, class. So, again, meron tayong accrued interest from January 1 to April 1. That's 3 months. So, 3 months ito. Ibig sabihin, yung remaining is 9 months. Tama lang? Kasi 1 year tayo is 12 months. Ganito gagawin ko dyan, class. Scenario number 1, nakalagay, the bonds were issued at 97, including accrued interest. Actually, pag kasama yung accrued interest, may term na ginagamit dyan. Ang tawag dyan is dirty price. Okay, so FYI na lang. Pag sinabing dirty price, nandyan yung fair value ng bonds plus accrued interest. Alright? So, ganito gagawin ko dyan, class. Na-receive natin na proceeds, how much? Sabi 97 daw. So, 1 million times 97%, 970,000. Okay? And since kasama na dyan yung accrued interest, including daw, tanggalin natin. So, pag minus ko yung accrued interest, na how much by accrued interest? Well, compute natin. So, 1 million yung face value. 1 million, multiply natin by 3 or by 12%. Multiply natin by 3 over 12 kasi 3 months yung accrued interest natin. January 1 to April 1. 1 million times 12% times 3 over 12. Nakompute nyo ba 30,000? Yes? Okay. 30,000 na yung class, yan yung accrued interest natin. So, minus ko dito. Therefore, for the bonds, yung fair value of bonds, okay, is 940,000. So, pwede mo isipin na yung 970 na ibabayad ng bondholders, 30,000 doon, binabayad nila para sa accrued interest, 940,000 doon, binabayad nila para doon sa bonds. Gets ba yan? Okay. So, ganito journal entry natin dyan para mas malinaw. April 1, 2025, okay, debit cash. How much yung cash na na-receive natin? 970. Kasi including daw accrued interest. Credit bonds payable at face amount na 1 million. Now, yung fair value ng bonds, 940. Therefore, 1 million minus 940, discount on bonds payable yan. Debit discount on bonds payable, 60,000. And then, meron tayong accrued interest na 30,000. Credit interest payable, 30,000. Okay, so yun yung journal entry natin. Analyze natin, class. Yung debit cash, ito yung na-receive natin. Okay, as issuer of bonds. Bonds payable, walang problema. Always at face value yan. Okay. Now, paano mo nakuha sir yung 60,000? Well, 940 yan eh. Okay? Yung fair value ng bonds. So, ibig sabihin, 1 million minus 940, 60,000. Sir, bakit kami interest payable na 30,000? Yung interest payable na yung class, babayad mo yan sa next interest payment date, December 31. Pwede mong isipin na, basically, yung mga bondholders natin, in the meantime, binayaran mo nila yung 3 months na interest, pero ibabalik mo sa kanila yan sa December 31. O, pakita ko sa inyo. December 31, sa interest payment date natin, journal entry is, hindi ko na papakita yung amortization, okay, yung payment na lang. Debit interest payable, 30,000. Pero how much ba yung buong interest for 1 year? Tama ba, 1 million times 12%? 120,000 talaga yung cash natin na babayaran. Okay, so every year, interest payment natin is 1 million, interest payment natin is 120,000 or 1 million times 12%. So credit cash, 120,000, which is for the whole year. Alright? Balancing figure mo, debit interest expense, which is 90,000. Analyze natin, class. Yung cash na binayaran mo is for 12 months. Tama lang? Yung interest payable na yan, na 30,000, is for 3 months. Yung interest expense, pag tinanong sa problem, ilang months yan? That's for 9 months lang. Okay, kailan yung 9 months? From issuance date until December 31. Ulitin ko, sumama na dito dyan. Na-receive natin 970. Okay? Pero sabi, including accrued interest, tinanggal natin. Tinanggal natin kasi separate natin, ipipresent yan sa journal entry. Okay? Okay tayo sa journal entry. Ngayon, si bondholder, meron siyang prepaid. O kaya binayaran niya in advance, yung 30. Ibabalik mo din sa kanya sa December 31. And then, since siya na yung may-ari ng bonds for 9 months, bayaran mo siya ng 90,000. Okay? Pero yung total na babayaran natin, since every 12 months tayo nagbabayad, is for 12 months na 120. Okay? Ulitin ko, actual cash payment, 120. Pero interest expense mo lang is 9 months. Hindi 12 months yung interest expense. 9 months lang. Okay? So that's scenario number 1. Scenario number 2. Actually, mas madali yung scenario number 2. Nakalagay dyan, the bonds were issued at 97 excluding accrued interest. Kung meron kang dirty price, meron ka rin tinatawag na clean price. Pag sinabing clean price, excluding yan. Okay? So, ibig sabihin, fair value of bonds pa lang yung kasama dyan. Wala pang interest. So, ganito gagawin ko dyan, class. So, we have yung proceeds na 970 Okay? Pero wala pa daw accrued interest yan. Sama natin. Accrued interest natin, na-compute natin is 30,000. Therefore, yung total proceeds natin is 1 million. Ganyan siya. Okay? Pakita ko yung journal entry para mas malinaw. April 1, 2025, debit cash. How much na receive natin talaga? 1 million. Kasi yung 970, wala pang accrued interest yan. Kailangan bayaran ni bondholder yung accrued interest. 1 million na receive natin. Debit cash, 1 million. Credit bonds payable at face amount, 1 million. Okay, so 970 para lang yan sa fair value of the bonds. So, ibig sabihin, 1 million minus 970, meron tayong discount on bonds payable na 30,000. How much yung accrued interest? 30,000. So, meron tayong credit interest payable, 30,000. Alright, so, journal entry natin, debit cash, 1 million, which is kasama yung accrued interest. Tama? Credit bonds payable at face amount, sir, paano mo na-compute yung 30,000 na discount? 1 million minus 970,000. And again, meron tayong interest payable na 30. Yun siya. December 31, 2025, doon lang din yung entry natin. Debit interest payable, 30,000. Debit interest expense for 9 months, 90,000. Credit cash, yung cash payment natin is for 12 months, 120,000. These are journal entries for illustrative example number 4, dirty price, clean price. Okay. Next, illustrative example is about, saan ba ako? Okay, sagot muna tayo class ng main problems. Okay, mga short problems lang yan. Easy lang sa inyo. No? Hindi ko na papakita yung journal entries. Mabilisan na computation na lang. Right? For bonds payable. Sige, so, let's see. Let's go to main problem. Number 1. Sagot tayo ng mga short problems. Multiple choice. Main problem number 1. Okay. Let's take a look at the question. Nakalagay dyan, the company received net cash from bond issuance. So, tingnan natin. On March 1, 2021, our leading company issued at 103, pag ganyan, bisayin 103%, plus accrued interest. So, pag sinabing plus, hindi pa kasama yung accrued interest. Or parang earlier, ang tawag natin dyan, clean price. Okay? Of 4,000 of its 9%, 1,000 face value bonds. The bonds are dated January 1. So, kung titignan mo yung timeline, January 1, okay, and then in-issue siya March 1. So, meron tayong accrued interest na 2 months. Diba sabi ko earlier, yung accrued interest, ibabayaran mo na ni bondholder yan. Tapos, sa next interest payment date, babalik natin sa kanila. Okay? Now, interest payable semi-annually, January 1, July 1. It paid bond issue cost. Tayo gumastos nun. Okay? Si bondholder, si issuer, tayo gumastos. So, bawas yan sa cash natin. The company received net cash from bond issuance of. So, ganito gagawin ko dyan, class. Meron tayong fair value of bonds. How much? Nakalagay 103. Tama? So, 4,000 times 1,000 times 1.03. Okay, ganyan ginawa ko. 4,000 daw yung bonds. 1,000 peso per bond. So, times 1,000 times 1.03 for 120,000. Yun yung na-receive natin. Kaya lang, syempre, isama mo yung accrued interest. Babayad din sa iyan ni bondholder. Okay? So, 4,000 times 1,000 times ilang months? 2 months times, ano yung interest rate natin? 9%. Times 9% times 2 over 12. Okay? So, 4,000 times 1,000 times 9% times 2 over 12, meron tayong accrued interest na 60,000. So, marireceive natin yan. Pero meron tayong bond issue cost na 200. Gastos natin yan. So, minus yan. Alright? Net proceeds, 4,120,000 plus 60,000 minus 200,000. Answer is 3,980,000, letter D. Easy. Okay, yan yung net proceeds natin. Tandaan mo lang, marireceive natin from the bondholders, fair value of the bonds. Huwag mo kalimutan, piniprepay din nila yung accrued interest. Pero syempre, sa next interest payment, babalik mo sa kanila. In the meantime, bayaran mo nila mga tao. Minus mo yung bond issue cost kasi gastos natin yan, kaya naka-minus yan. Let's go to main problem, number 2. Question is, the company should report the bond liability at on June 30, 2021, Oliver Company issued at 99 or 99%, 5,000 of its 8%, 1,000 face value bonds. The bonds were issued through an underwriter. Pag sinabi underwriter, isipin mo parang iyan yung broker or yung middleman between the issuer and the investors or bondholders, to whom it paid bond issue cost of 4 to 5. The company should report the bond liability. Well, ganito lang yan. Meron tayong fair value or yung present value of the bonds. Sabi dyan, 5,000 daw, 1,000 face value, and then 99%. O yan, kumpitin natin yan. 5,000 times 1,000 times 0.99. So meron tayong 4,950,000. Pero huwag mong kalimutan yung bond issue cost. Kung maalala nyo, class, yung bond issue cost, add natin sa discount yan or minus sa premium. Ibig sabihin, bababa yung carrying amount ng liability natin. Tama? So, bond issue cost natin, nakalagay dyan, 425,000. Ang tanong sa atin, how much daw yung bond liability or yung carrying amount? 4,950 minus 425,000. Sagot mo dyan, class, 4,525,000. Letter A. Okay, yan ang kasimple. Sige, let's go to number 3. Okay, it's December 31, 2021, statement of financial position. What amount should report as bonds payable? O, ganito gagawin ko dyan, class. On January 1, 2021, Kimberly Company issued 9% bonds, face amount of 5 million, which mature on January 1, 2031. So, ilang years yun? 10 years, tama? Sige, the bonds were issued for 4,695 at a discount. Okay, for main problem number 3, discount yan. And then, what else? Nakalagay dyan, to yield 10%. So, lagay ko dito yung nominal rate is 9%, effective rate natin is 10%. Payable annually, hindi mo kailangan i-adjust yan. Okay? It uses the effective interest method and does not elect the fair value option. Yung fair value option, na-discussan natin yan sa notes payable, applicable din yan sa bonds payable. Huwag natin i-discuss yan sa bonds payable for reporting financial liabilities. In its December 31, 2021, what amount should it report as bonds payable? Gagawa ka na ng amortization table dito. Tama? Kailan siya in-issue? January 1, 2021. Okay? Ano yung tanong? 12/31/2021. So, gawa ka na ng amortization table for one period. Ganun na siya simple. Ang tanong is, how much daw yung bonds payable? Well, ganun lang gagawin ko dyan, class. Tama ba? Carrying amount ng January 1, 2021 is 4,695,000. And then, kung imagine mo yung amortization table natin, meron tayong interest paid. How much yung interest paid? 5 million times. Nominal rate natin is 9%. Okay? 450,000. Alright? Interest expense natin, carrying amount na 4,695,000. Multiply natin by 10%. Okay? Times 0.1, 4,695,000. And then, amortization natin, difference nila, 4,695,000 minus 450, 19,500. Now, ano gagawin mo sa 19,500? I-add mo dyan or i-deduct mo? Ang face amount is 5 million. Gusto natin mag-equal sa face amount yan. O, add mo lang. Plus 19,500, 4,695,000, plus 19,500, sagot natin dito, class, 4,714,500. Letter B, carrying amount, December 31, 2021. Madali lang isolve, di ba? As long as alam natin yung basics, journal entries, amortization tables, madali lang mag-solve ng bonds payable. Let's go to main problem number 4. Main problem number 4, again, multiple choice pa rin, short problem. In its October 31, 2021 balance sheet, what amount should the company report as an amortized discount? Oh, sorry, an amortized premium pala. On May 1, 2021, Noemi issued 11% bonds in the face amount of 1 million, mature on May 1, 2031, so that is 10 years. The bonds were issued to yield 10%, so ibig sabihin, nominal natin 11%, effective rate natin is 10%. Okay, so kaya siya na-issue at a premium kasi nominal rate is greater than effective rate. At a premium yan. Okay, meron na tayong premium na 62,000. I-account natin yan. Premium on bonds payable, alam natin normal balance niya is credit 62,000. In its October 31 balance sheet, what amount should the company report as an amortized premium? Take note na semi-annual yung bayaran. Okay, divide mo yan by 2. That is 5.5%. And then divide by 2, that is 5%. So, i-imagine ko lang yung table. Meron akong interest paid, meron akong interest expense, and then meron akong amortization. Okay? So, yung interest paid natin is 5.5%. 1 million times 0.055, 55,000. Interest expense natin is based on 5%. So, 1 million times 5%, tama? So, ulitin ko. Sorry, yung carrying amount pala natin is 1,062,000, tama ba? So, kung may face amount tayo, class, na 1 million, and then meron tayong premium na 62,000, yung carrying amount natin is 1,062,000. Alam natin, yung carrying amount, yung basis ng interest expense. 1,062,000, multiply natin by 5%. Therefore, interest expense natin is 53,100. 55,000 minus 53,100, that is 1,900. Journal entry, debit premium on bonds payable, credit interest expense. Therefore, i-debit mo yan, 1,900. Ending balance ng premium, yan yung tanong sa atin, how much daw yung unamortized premium, 62,000 minus 19, 60,100. Letter B or boy. Yun. Okay, this is our main problem number 4. Now, punta tayo sa illustrative example number 5. Okay, illustrative example number 5. Pakita ko naman sa inyo, class, kung paano yung accounting pag magre-retire tayo ng bonds payable. Ibig sabihin na magre-retire, well, babayaran na natin ulit yung mga bondholders. Okay, kasi yung mga bondholders, basically, pinahiram nila tayo. Okay, kaya tayo may utang sa kanila. Okay, creditor sila. So, yung bondholders na babayaran natin eventually. Principal and interest. So, paano gagawin natin dyan pag ni-retire na natin yung bonds? So, tingnan natin. The requirement is, compute for the gain or loss on retirement and provide the journal entries. So, this is from illustrative example number 5. On January 1, 2025, BSA company issued 5-year, 12% 1 million bonds for 1,075,816. So, that's premium. Okay? Principal is due at maturity, but interest is due annually. Effective interest rate is 10%. So, lagay natin dito, yung nominal rate natin is 12%. Effective interest rate is 10%. And then, kailan yung maturity? That is 5 years daw, tama? On July 1, 2027, BSA retired the bonds at 102 or 102%. So, take note, class, na in-issue siya January 1, 2025. Ni-retire siya July 1, 2025 before maturity. So, ibig sabihin, ni-retire natin siya after 2.5 years. Tama lang? After 2.5 years. Now, the retirement price includes payment for accrued interest. Kasama daw yung accrued interest. So, paano gagawin natin dyan? Well, kailangan malaman natin, class, yung carrying amount of the bonds July 1, 2025. Okay? So, ganito gagawin ko dyan. Kailangan tayo maggawa ng partial amortization table. We have date, interest paid, interest expense, amortization, and carrying amount. Okay? So, ganito gagawin ko dyan, class. January 1, 2025. And then, we have December 31, 2025. December 31, 2026, and December 31, 2027. Take note na alanganin yung pag-retire, middle of the year. So, kailangan kong malaman kung how much yung amortization table natin between 2026 and 2027. Okay? So interest paid natin is based on 12%. 1 million times 12%, that's 120,000 per year. Right? And then, kompletuhin natin yung amortization table. So yung carrying amount natin based on the first sentence, the present value, 1,075,816. Okay, so kompletuhin natin class, 816. Multiply ko yan by interest expense natin is 10%. Tama? And interest paid is 12%. Times 10%, 107,582. Amortization table, amortization natin class, yung difference na is 12,418. And syempre, gusto natin maging 1 million yan. So bababa yan, 1,063,398. So kompletuhin ko yung table natin. Interest expense natin class, December 31, 2026, 106,340. Amortization is 13,660. Carrying amount is 1,049,738. And then, December 31, 2027, 1,04974. Amortization is 15,026. Carrying amount is 1,034,711. Take note again na yung retirement natin is July 1. Okay? Pero yung amortization table natin is December 31, 2027. So, kukunin natin class yung 6 months lang. Alright? So, gato gagawin ko dyan. Tama ba yung 120,000 na yan is for 12 months? Times 6 over 12 ko yan, makukuha ko is 60,000. Interest payment ko is just 60,000. Amortization ko is not 15,026. Multiply ko yan by 6 over 12. 15,026 times 6 over 12, 75,13. Okay, that's my amortization. Sir, paano gagawin mo dyan? So, ganito gagawin ko dyan, class. Carrying amount natin, December 31, 2026 is 1,049,000. Okay? 738. And then, meron tayong amortization, 6 months na 7,513. Minus 7,513, makukuha natin dyan, 1,049,738 minus 7513, you get 1,042,225. Ano klase yung amount na yan? This is the carrying amount, July 1, 2027. Nakuha niyo yan? So, ganyan siya. Ganito lang gagawin ko dyan. So, journal entry, debit, bonds payable, July 1, 2027. Again, ni-retire natin. So, binayaran na natin yung bondholders. Debit bonds payable, how much yung face amount? 1 million. Okay. Credit cash, sabi dyan, tingin ka dun sa last sentence, the retirement price includes payment for accrued interest. How much ba binayaran? Nakalagay 102 or 102%. 1 million times 1.02, yung cash natin is 1,020,000. So 1,020,000. So this is 1 million times 1.02. Okay? And then what else? So kung ito yung carrying amount mo, and yung face amount is 1 million, therefore yung 42,225, that is the premium. Okay? Debit premium on bonds payable, 42,225. And then what else? Don't forget na nagbayad tayo ng interest na 60,000. Okay? Debit interest expense, 60,000. Balancing figure natin is gain. Okay? So 1 million, debit muna, 1 million plus 42,225 plus 60,000 minus 1,020,000. Gain natin dito class, 82,225. Alright? So sagot natin dyan, gain on extinguishment of bonds payable, 82,225. Alright? So ang ginawa ko, kinuha ko yung carrying amount as of the date of retirement, which is July 1, 2027. And then sabi dyan, yung cash payment daw natin kasama yung interest na 60. Don't forget yung debit na interest expense na 60 para mabalance mo yung journal entry natin. Gain is 82,225. Alright? Okay, let's answer main problem number 5. Ganun din siya. Extinguishment then of bonds. Sige. Question is, how much loss should it report on this early extinguishment of debt? So, tignan natin. Main problem number 5. Again, pag ganyang class, journal entry lang tayo dyan. Lemar Inc. issued 500,000 face amount of 10% bonds with interest payable on January 1 and July 1. The bonds were called, ibig sabihin ng called, binayaran natin, okay, in at 103. So, 500,000 times 1.03. That is, nakompute ba yung 515,000? So, ito lang gagawin ko dyan. Debit bonds payable, syempre, laging face amount yan. So, 500,000. How much yung binayad natin? 515,000. Okay? An amortized bond discount amounted to 40,000 as of July 1. So, di natin kailangan i-update kasi updated na yung amount na binigay sa atin. Tanggalin natin yung discount. Credit discount on bonds payable. How much? 40,000. Balancing figure natin. Credit natin is 515 plus 40. That's 555 minus 500. Debit loss on extinguishment, 55,000. Okay? So, simply, journal entry lang. Update yung amounts. Okay? Especially yung premium or discount on bonds payable. Update natin yan. And then, journal entry. Ayun. The balancing figure is gain or loss on extinguishment of debt. For number 5, dog yung sagot natin, 55,000. Okay. Now, sagot tayo ng konting theory items. Sige, let's go to number 1. Theory number 1. Okay. This is about yung classification of current versus non-current. Ito yung may refinancing na na-discuss natin before. Applicable din kasi yan sa bonds payable. Okay? Pero, actually, for theory number 1, none of the above yan. Alright? Walang sagot dyan kasi lahat yan incorrect. Pakita ko sa inyo class kung bakit siya incorrect. Number 1, a long-term debt, or in this case, bonds payable, falling due within 1 year, okay, currently maturing, mamature na next year, should be reported as non-current if the following conditions are met. Choose the incorrect one. Alin daw dito yung mali, okay? Actually, lahat yan mali. Bakit, sir? The original term is for a period of more than 1 year. Actually, hindi mahalaga yung term, okay? So, as long as yung remaining maturity date, or yung remaining term is 12 months, current na yan. Alright? So kaya mali yan. Hindi necessary na yung original term is more than 1 year. Boy, the enterprise intends to refinance. Letter C, the intent to refinance. Okay? Okay sana, kaya lang, hindi intent. Dapat discretion. Okay? Maalala nyo yung discussion natin, dapat meron tayong discretion to refinance. Alright? So kung babasahin mo yung C, the intent to refinance is supported by an agreement to refinance which is completed before the balance sheet. Okay sana, pag nag-refinance ka before the balance sheet date, pero again, hindi intent. Dapat meron tayong discretion. Kaya mali din yung D. The intent to refinance, mali na naman. Dapat discretion. Is supported by an agreement to refinance which is completed after the issuance. Doon yun. Mali din yun. Kailangan, it's either before the balance sheet date or before the issuance. Okay? So basically, walang sagot dyan sa number 1. So again, A, B, C, and D, lahat yan incorrect. Or lahat yan sagot kasi choose the incorrect one. So A, B, C, and D, lahat sila incorrect. Okay? Number 2, covenants are often attached to long-term borrowing agreements, such as bonds payable, which represent undertakings by the borrower. Under these covenants, if certain conditions related to the borrower's financial position are breached by may breach of covenant, okay, so the liability becomes payable on demand. This liability can still be classified as non-current. Kung maalala nyo class yung concept dyan, kapag nagbigay sa'yo ng grace period for at least 12 months before the balance sheet date, dun ka lang magiging non-current, okay? Kaya letter C yung sagot mo dyan. When the lender has agreed before the balance sheet date not to demand payment, yun yung grace period. And it is probable that further breaches will not occur within 1 year. Very important yun. So, dapat at least 12 months from balance sheet date. That's why, for number 2, best answer natin is letter C. Number 3, if a long-term debt becomes callable or payable on demand due to the violation of a loan covenant, again, if silent, kapag naging payable on demand, current na yan. Letter B, the debt must be classified as current. Okay, number 4, after initial recognition, an entity shall measure a bond liability at amortized cost. Subsequent measurement, ano gagamitin natin? Effective interest method. Okay, letter A, pag mag-create ka ng amortization table, we use the effective interest method. Number 5, bonds payable should be reported as a long-term liability kasi usually kas matagalan yung bonds. 5 years, 10 years, even 15 years, mga ganyan. Issuer at, punta ka sa DOG, issue price plus any unamortized premium or less discount. So again, yung presentation in the balance sheet, bonds payable minus discount. Okay naman, bonds payable plus premium. Ganun yung presentation. That's why DOG yung sagot natin. Number 6, when the effective interest method is used to amortize bond premium or discount, the periodic amortization would, kung naalala nyo class, kinumpare natin yung issue data discount and premium sa amortization table, whether discount or premium, yung amortization column natin is always increasing. Okay? That's why DOG yan. Increase if the bonds were issued at either a discount or a premium. Number 7, if a bond was sold at 108, ibig sabihin 108%, at a premium yun, tama? Mas mataas sa face value. Okay? Interest, the stated interest. Ano yung stated? Yung nominal rate. Alright? Yung stated interest rate daw natin, so kapag at a premium, mas mataas siya than the effective rate. That's why letter C, yung sagot natin, higher than the market rate or effective rate. Number 8, X sold and issued a 100,000 10% bond at 99. Discount naman this time. Therefore, the bond is letter A, sold at a discount because the stated rate was lower. Okay? Kapag naman at a discount, mas mababa si stated or si nominal sa effective rate. That's why number 8 is letter A. Number 9, which of the following is correct? Isa-isa natin class. Sige natin kung bakit mali yan. A, the yield or effective rate is equal to the stated rate. Mali yun. Okay? So yung stated, yun yung nominal rate. Yung yield, effective discount, yun yung mga magkakamukha yung terms. B, the terms yield, stated, and market are generally interchangeable. Mali yung stated. Okay? Kasi yung stated, again, nominal yan. Ang magkakamukha, effective, market, discount, or yield. C, interest, revenue, or expense related to bonds are always computed using the stated and the effective rate. Alam natin, interest expense, or sa investor side, interest revenue, carrying amount times effective rate. So yung DOG yung tama. If the bond is sold at its face amount, the stated and effective are the same. Equal sila kapag issued at a face amount. Number 10, bond issue cost should be, bond issue cost natin, punta doon sa boy, recorded as a reduction in the carrying amount. Kasi pag chinarge mo sa discount yan, alam natin yung discount, contra bonds payable, yan, bababa yung carrying amount natin. Or pag chinarge mo sa premium, again, bababa yung premium, bababa yung carrying amount. So boy yung sagot natin for number 10. Number 11, an investor purchased a bond as a long-term investment on January 1. Annual interest received on December 31. An investor's interest income would be lowest. Saan ba based yung interest income? In this case, ang pinag-uusapan natin investor or yung mga bondholders. Okay? Again, interest expense, interest income based yan sa carrying amount. Tama? Kailan siya magiging lowest? Siyempre, pag at a discount, kasi mababa yung carrying amount mo doon. Letter A yung sagot natin dyan. If at a discount issued yung bonds, mababa yung interest expense or interest income because computed siya as carrying amount times effective rate. 12. An investor purchased a bond as a long-term investment. The investor's carrying value for the first year will be highest. O highest naman kapag premium. Okay? Punta ka sa DOG. Premium and amortized by the effective interest method. Okay? Number 13. When interest payment dates of bonds are May 1, November 1, and the bond is purchased on June 1, ano tawag natin dyan? Issued between interest payment dates. So, kailangan bayaran ni bondholder yung accrued interest. The amount of cash paid by the investor or yung bondholder will be punta ka dun sa dog. Increase by accrued interest. Right? So again, pag ganyan, babayaran muna tayo ni bondholder, pero babalik din natin sa kanila yan, sa interest payment date. Dog for number 13. Number 14. For bonds payable, the cash interest paid is, punta ka dun sa A, the same amount regardless of whether the bond is issued at par, discount, or premium. Syempre, based sa nominal rate yan. Face amount times nominal rate. Kaya yung interest paid natin, every interest payment period, fixed amount yan. Okay, letter A. Whether at face value or at par, or discount, or premium. Laging face amount yan. 15. The use of effective interest method in amortizing a premium would result in, punta ka sa letter C, okay? Number 15, letter C, a decreasing amount of interest expense and a decreasing carrying amount of bonds payable. Kasi pag premium, ang goal natin, bumaba siya at face value or to face value. And alam natin, yung interest expense, based siya sa carrying amount. Since decreasing yung carrying amount, decreasing din yung interest expense. That's why letter C for number 15. Number 16, under the effective interest method of bond or premium amortization, the periodic interest expense. So alam natin, pag interest expense yung tanong, letter D, effective rate multiplied by the carrying amount. Pag interest paid yung tanong, face value times the nominal rate. Okay, so for number 16, answer natin is dog. And number 17, if bonds are sold at a discount and the effective rate or effective interest method is used, interest expense will, so alam natin kas, ang interest expense is based on carrying amount. Pag discount yan, tumataas yung carrying amount natin. Therefore, tumataas yung interest expense. Letter A, increase from one period to another. Okay, so for number 17, answer natin is letter A.